a major market event is happening right now, and of course UST lost its peg, and Luna Foundation Guard is now lending $1.5 billion in Bitcoin and TerraUSD to defend the peg of its algorithmic stablecoin to the US dollar. Over the weekend, UST briefly lost its peg to the US dollar, falling to about 98 cents before climbing back to almost $1.
Our UST is an algorithmic stablecoin. It uses another coin called Luna to balance a peg to the US dollar for the main token. And when these tokens do is they have a floating peg on one side, and then one peg is to the United States dollar. They're supposed to interact with each other, and that peg is supposed to stay whole to the dollar. Unfortunately, there's like this not so virtuous cycle where if one starts selling, the other will start selling. If one starts pumping, the other one can start pumping. And yesterday we saw the sell effect, right? So Luna started falling and the token UST started falling as well.
What exactly happened was that on Saturday night, this prior weekend, it looks like about $500 million was withdrawn from Anchor protocol, which, if you're not familiar with it, is the lend, borrow, earn protocol on Terra. Anchor depositors, essentially, if they deposit UST, they are given a 20% APY that is essentially subsidized by Luna or the Luna Foundation Guard. And so somebody ended up withdrawing a large amount of their UST from Anchor, and it kind of just started a bit of a bank run. After withdrawing it from there, they went and sold their UST via Curve, where there was very low liquidity for UST, and that essentially started the break on the peg.
Check yourself before you get on board with supposedly bullish narratives. I think it's really important to have a critical eye and not cheerlead things just because somebody says they like Bitcoin and the narrative seems mildly bullish. I think this is probably the worst false narrative that we've seen in the Bitcoin space.
I would note that there was a report just this morning in the Wall Street Journal that a stable coin known as TerraUSD experienced a run and had declined in value. And I think that simply illustrates that this is a rapidly growing product, and that there are risks to financial stability, and we need a framework that's appropriate.
Well, that escalated quickly, going from UST on crypto Twitter right up to Capitol Hill with Janet Yellen. That's pretty crazy that she has some anon burner crypto Twitter account that is plugged into these conversations. So credit to her for being up on the news.
The question now, we did have Do Kwon, the leader of the TerraUSD project, tweeting about 20 minutes ago that he has a rescue plan. It remains to be seen what exactly that plan is.
The Luna Foundation Guard, the entity in charge of maintaining the UST stablecoin one-to-one peg to the US dollar, draining its $1.5 billion Bitcoin reserve and buying $850 million more in BTC to defend UST's peg. UST dropped as low as 61 cents on Monday, suggesting a potential collapse of the market's leading algorithmic stablecoin. Terraform Labs CEO Do Kwon saying the reserves are being lent to market makers. The move may have created sell pressure, contributing to Bitcoin's dip below $30,000 on Monday.
A concept, because they effectively depend on this financial alchemy of convincing a sufficient mass of people that a thing with effectively zero intrinsic value has enough value to stabilize this massive ecosystem of stable assets. And I think that that is a challenging bit of alchemy to maintain, but that it's a very popular bit of alchemy because while you're building it up, while you're doing all the unsustainable things like subsidizing the anchor yield and trying to grow the demand that way, there are many people in the ecosystem who can make money from those unsustainable efforts.
And we do have Do Kwon, who is the CEO of Terraform Labs, who is behind Terra LUNA. He has come up with a plan. He says, before anything else, the only path forward will be to absorb the stablecoin supply that wants to exit before UST can start to repeg. There is no way around it. We propose several remedial measures to aid the peg mechanism to absorb supply. Among those proposals is to increase the burn rate of UST. They also want to continue to explore various options to bring in more exogenous capital to the ecosystem, which is another way of saying you know, their ecosystem needs continuous third-party capital to survive. And that raises all sorts of questions of how sustainable is that. And he also mentions that as we begin to rebuild UST, we will adjust its mechanism to be collateralized, which seems to me an admission that their algo stablecoin model didn't work.
CoinDesk was also able to report an interesting little nugget this morning about Terraform Labs CEO Do Kwon. According to ex-colleagues, he was behind another algorithmic stablecoin experiment called Basis Cash, which launched in 2020 and didn't really ever get off the ground that much. So the dream of an algorithmic stablecoin was alive then, as it is now. And this anonymous team, funnily enough, named Rick and Morty, brought this thing to fruition. And now, according to sources, as captured here by Sam Kessler, doing yeoman's work on the overnight, he was able to get this on the record in what was a bit of an open secret in certain blockchain communities. But now this is confirmed that Do Kwon was one of the anonymous founders of this project that didn't really take off at all.
A lot of algorithmic stablecoins like Iron Finance, Basis Cash, ESD, DSD. The main problem wasn't that they had an on-chain programmatic monetary policy. The problem was that the incentives that they were giving to get people to hold the algorithmic stablecoins was not sustainable. This is essentially a Ponzi scheme whereby if you hold 1 unit of our algorithmic stablecoin, we're going to give you more than 10x the amount of algorithmic stablecoins over the year.
The Luna Foundation Guard moving the entirety of its reserves to Bitcoin exchanges to defend its UST stablecoins $1 to $1 peg. LFG's reserve balance has declined from about 80,394 Bitcoin to 0. And the majority has been deposited onto crypto exchange Gemini, according to Glassnode data. So you saw this coming a mile away. Did you think it would happen this quickly?
And I wanted to even give them the benefit of the doubt that, what I was saying is that I didn't even think that this was purely just a bank run kind of problem. I thought that, even if it happened in slow motion, even if it was kind of like something like a bank walk, it was more about this thing not being solvent. So I could have seen this whole unwind happening over, a period of weeks rather than like 3 or 4 days. So it's been very brutal, very sharp.
Crisis mode is still happening when it comes to Terra. Terra has proposed a token burn to increase the pool size and halt UST dilution. The idea here is that decreasing the amount of UST in circulation and increasing available Luna is the easiest way to re-peg the token. So validators of the network can vote on this proposal, and the yes side has received a 50.47% vote.
I have seen a lot of somewhat worrying chatter on Twitter about people thinking that because this has gone down 99%, it has to go up again. And that is not true. So I just want to make sure that that gets out there. There is no reason to expect a bounce in this asset.
I think the second you call it an algorithmic stablecoin, you've stopped calling it a stablecoin. There's nothing stable in many of these cases about how those algorithms are based, because the assets underlying them that's shifting the reserves generally are not stable themselves.
But they had to halt the chain because of the economics and the way that it works with the security. So in this particular case, there's just built-in dynamics that drive this down towards nothing. And I just want to clarify that that is significantly different from most other crypto projects. So for example, we're not talking about the fact that like EOS is still trading. There are a lot of not that relevant projects that are still trading very widely, but those are different cases because there can still be value there. There is still community building those things, and really anything could happen. We could see a revival of EOS at any time, whatever. But this is a unique case where there is a particular dynamic that has destroyed all this value, and that needs to be acknowledged.